Hello, everyone, and welcome to today's market fundamental and technical breakdown. It's your boy Anthony Phillips Njoku, and I'm a certified professional digital trader with 13 years of experience. And I'm the founder of Tenet Digital Lane, where everyone who has a knowledge gap in digital trading, real estate investments can be able to learn the right formula, implement it in this industry, and use that education to make outstanding results, making profits and earning income. So if you want to know more about that, dive down to our website www.nzdusd.com, grab yourself a package, and then you can start the learning process instantly. You can also schedule a Zoom meeting with me and I will discuss and define every single process for you. The link is on the description section. Just grab that link, join our group on WhatsApp, Instagram, LinkedIn, Telegram, Facebook, wherever that seems convenient for you. Reach out to me and we'll be able to give you the appropriate services. So this forex fundamental and technical breakdown is for the time period of 18th September to the 22nd of September. 18th September to the 22nd of September. And I know that it's going to be a very, very impactful one. So, how we do this is that we're going to break down the charts, the forecast about the charts. And when I say the forecast about the chart, I'm talking about, for instance, when we have the structure in the market, how we expect the market to play out. And then we're also going to discuss about the technicals. When I talk about the technicals, it has to do with the structure, and then the fundamentals has to do with the economical events that would move the market to a certain direction and in a certain way. So if this is your first time, don't forget to smash the like button. Don't forget to comment below your favorite pair, and also don't forget to subscribe and activate the notification icon. So over here now, diving into today's market fundamental breakdown, we're starting up with DXY. DXY is the strength of the dollar. DXY is the strength of the dollar, and from what I can see on DXY, we have a massive area of what liquidity here. Also, we have a H4 validation point there, and also a daily validation point there. So it's a total area of complete reversal. So starting off the week, I expect a little or a deep corrective structure, and the corrective structure will be about three waves: impulse, correction, impulse. And then before the week rounds up, before the Fed news, then we'll be expecting what they push the upside for the dollar, giving the dollar strength. So starting off the week, where I expect what the risky assets to gain some momentum, and then before the week ends up, we'll end it at the higher part of this level. So I'm going to explain to you from day Monday, Tuesday, Wednesday, Thursday, and Friday the economical event I expect to move this market. Okay, so stay and watch to the end. We'll be breaking down the economical event. So for the euro against the dollar, like I said, we expect the dollar to move to the upside, and if sorry to move to the downside. If the dollar is moving to the downside, we expect the euro USD to move to the upside, because euro USD is about 80% correlated with DXY. If you don't understand the structure of euro USD, if you're able to understand the structure of DXY, you can be able to trade euro USD profitably. Okay, you can be able to trade euro USD profitably. So when it comes to euro USD, what I expect is the market will come into this war. There is a 15 minutes uh order block and created by a fair value gap. There's fair value gap at that point too. So from there, we can be expecting what a deeper corrective structure. If you look closely on euro USD, we are more on a downtrend, creating what lower lows and lower highs, lower lows and lower highs, taking liquidity below here. So there's high liquidity line above here. There's liquidity line here. and this could be a very important time in the market. You need to be trade cautiously for EURUSD. You need to trade cautiously this week, and I'll be telling you why. Because we have a lot of economic events, so you need to trade cautiously. You need to apply proper risk management, and for you to be able to be profitable in the market is that you shouldn't be afraid of losing money. No, as a trader, that's what you signed up for. Whenever you come to the market, you have signed up for losses, you have signed up for profit. It all depends on the psychology you use to come into the market with. The psychology is very, very important, one. And then secondly, what else that is important is whenever you're losing the market, you should know that there is a period when the market is going to be what, against your bias. You can be correct on your structure, you can be correct on the fundamentals, but it's just there. There could be a little bit of of manipulation that comes into the market. So what I want to advise you guys is that whenever you're trading, apply proper risk management. Apply proper risk management. I know a lot of traders that they will enter 5 6 trades and they tell me that they're risking 2%, but you're risking about 2% on 5 different positions. That's about 10% of your account. If that trade goes against you, 10% of your account, that's a shark bite. It's a shark bite, and it's going to really affect your psychology as a trader. But think about it, you as a trader, you lose 1%. 1%. Are you going to feel hot? No. Because if you lose 1% and your insurance, or let me say your allowance for a day, we have 365 days, and your allowance for a day in the market is 1% per day. You have about 100 days, 100 days to trade that account and what, see yourself achieve profitability. So let's say you're risking 1% and to earn about 5% minimum. Your risk to reward, you're risking 1% of your account and you're looking for only trade setups that's going to give 5%. Think about it when you hit that bullseye and you lose the first trade. After that bullseye, you lose the second trade, you're still up. You're still up about 3% on your account. So risk management is very, very important. Psychology is very, very important. Put yourself in the zone. Put yourself in the right frame of mind to trade, okay? Not minding whatever the environment is doing. Not minding, okay? There can be negative energy around you. There can be doubts, people that doubt you around you. There can be people, there can be a lot of factors. But you should try as much as possible to put yourself in the right frame of mind. And how do you do that? Meditation. Unlock the act of meditation. You understand? It gives you control over your emotion, and if you're able to control your emotion as a trader, you're unstoppable. You're like a ticking time bomb that is going to explode, become a star. So I want you to take that very serious. This market currently is at a verge of what, reversal. Is at a verge of reversal. So we'll be trading the deep corrective structure. After we trade the deep corrective structure, then before the week ends, which we have London CPI this week. We have London CPI this week. Corrective structure for now, and then by Wednesday when we have our live trading session, we'll update you. We'll update you. Okay, so the next is audusd. Okay, so for audusd, over here we have a level that has been respected by market multiple times, about 3 times over here. And also, if you take the Fibonacci retracement from swing low to swing high, this is the area of 50 and 60 Fibonacci retracement. You understand? But if you look closely, we have a H4 validation point over here at on AUD and we can be expecting market to come down to fulfill that efficiency or fulfill that efficiency If it doesn't do that, I guess we're going to be using the fair value gap. Okay, we could be using the fair value gap or market cap, the price cap. We're using the price cap to make the entry and then move the price to the upside for AUD. Because like I told you guys, dollar is going to be what, having a deep corrective structure. And if dollar is having a deep corrective structure, every risky asset is meant to be bought. When I talk about risky asset, that's AUD. AUD is a risky asset against the dollar. Euro is a risky asset against the dollar. Okay, we have safe haven assets like Japanese yen. We have safe haven asset like uh the dollar itself. Okay, the dollar and the Japanese yen. So we'll be approaching the market in a conservative manner this week because there's a lot of change of structure that will be playing out. So the next on the list is gold. The next on the list is gold. This is God's money. God's money. So for gold, we can see that we have a structure that seems like the market will be what, having a corrective structure, because if you look at gold currently you see that we are on a downtrend. This is more like lower high, lower low, lower high, lower low, lower high. We're expecting next lower low for gold. We're expecting the next lower low for gold. And if it's going low, we'll be going to take the liquidity over here. There's this liquidity over here for gold. So we'll be watching out for that. We'll be watching out for gold for that, to go and take this liquidity over here. But if gold takes out this liquidity above here, if it takes out this liquidity above here and above this 19,300 psychological level, it could be using what, a reoptimization zone for a buy momentum to the upside. Okay, so but what current I see currently on gold is taking out this liquidity over here. There's liquidity over here because there is an order block that needs to come and fulfill the efficiency over here, which the market has not fulfilled its efficiency. And for me, that's what we'll now be expecting, what, the buy setups for gold. Okay, so that's what I see currently for gold, precious metal. So those investors, if you're an investor, just hold your cash. It's not yet time to go in big on gold. Okay, to stack on gold and leave it to appreciate. The current value is going down. But if you're more of the investors who just like to stack and hold, okay, like every month they add and add and add upon their positions. From there, you can be able to what, hold, and each time the market goes down you buy more, each time the market goes down you buy more. Okay, that's a strategy as well. So for us oil is the index price for the price of oil products, whether it's any oil company you know of. Okay, they have a pegged price per barrel. Okay, so currently we have $91.17 per barrel. $91.17 per barrel for US oil, crude oil. So at this point, I'm only looking for sell setups for US oil. Even if it goes and takes out this high and goes to the $92 per barrel price, I'm looking only for sell setups. When I see the sell setups and the structure has aligned by for me for sell setups, I'm going in for it. Okay, even if the market push up higher, I don't want to FOMO into going for buys. But I know scalpers, you guys can trade the buys. Okay, scalpers, you can trade the buys. But for me right now, I'm looking for only sell setups for US oil. Okay, so I just want you guys to get ready because like I told you guys earlier this year, US oil is going to $100 per barrel. And I kept mentioning it. I kept hitting the nail on the head. I told you guys, buy stocks that has to do with companies that are into oil exploration. Just few weeks ago, I found a new company, a startup company that just was venturing into the oil exploration business, and they just hit jackpot. they just found oil in an African country. I'm not going to be listing the name of the company. I'm not going to be listing the country that they found oil from. But I want you to know that there is a company that just hit jackpot in an African country, and the African country now is now promising the citizens that they will give them good job opportunities. They will give them fair wages when it comes to salary. Just do your research. Those are the type of investment opportunities we have that a lot of people don't find out about, and they always complain that they don't know how to make their money increase in value. So you should try as much as possible to figure that out. And if you want to invest in such sector, do your own research. Do your own research. But one thing I have to tell you is that whenever you're investing in shares or stocks of companies, always invest in dividend shares. Shares that will give you dividend at the end of 6 months or at the end of 1 year. Okay, so it's more of a cash flow capital gain. So, and these capital gains will be taxed. If you're in a country that tax, okay, they're going to tax you on your capital gain. Also there are some platforms you can use in my country, West Africa, Nigeria. You're still going to be taxed after you've withdrawn your capital gains from those companies. Okay, so just know that capital gains are taxed, but passive income is not taxed. Okay, so meanwhile, the next on the list is Bitcoin. Bitcoin. A lot of FOMO going on with Bitcoin. A lot of people saying Bitcoin is going to move down more. Bitcoin is going to keep moving up from here. Like I told you guys last Sunday, I told you guys that I expected Bitcoin to go down to a psychological level of $25,000 per Bitcoin, and right now it has touched that level. You can see that it swept that level on Monday, the 11th of September, exactly by 5 p.m. West African time. It swept that level and activated the trades there. I don't know how many of you that had the buy limit order placed, but mine has been activated. So we're expecting Bitcoin to move up. Okay, we're expecting Bitcoin to move up to the level of about 3,000 upwards 3,000. But like I told you guys before, this structure I'm currently seeing on Bitcoin resembles this structure here. Let me show you a past structure. Okay. Okay. Bear with me, guys. Okay, I think, yeah, this is the structure. That structure I see in Bitcoin is exactly similar structures like this. Yes, exactly. What I see over here. He took out this liquidity over below here, took out liquidity over here, and then started spiking up. That's what I see for Bitcoin when it comes to the current level it is right now. Okay, so like I told you guys, I expect Bitcoin to come and take out liquidity here, take out this liquidity here. There was liquidity lying here, take out liquidity over here. Okay, so now that it has taken out those liquidities, now it is taking out buy side liquidity to the upside. Okay, so currently any buy setup you get, you can still take in that trade for Bitcoin for the upside. Okay, so that's what I have to share with you right now. So for you guys that are new, please don't forget to smash the like button. Don't forget to subscribe to our channel. Don't forget to also comment below your favorite pair you want me to add to the list. Like the last time I saw someone that said I should add Nastati, which has to do with the 30 companies, the top 30 companies in the United States of America. So I will be creating just not one course, but also I'll be creating a course on the strategy on how to trade gold and also how to trade now 30, so I can be able to add it to the list. Okay, so if you open mind to learn more about digital trading, you can dive down to our website www.10digitallane.com. You grab yourself a package. You can see here we have the 10x Crypto Academy package. We have our audio books, Rise and Grind, which has to do with mindset, wealth building mindset. Then we have the Pro Forex, we have the Beginner Forex Part 1A and Beginner Forex Part 1B. All this is all installed. You also gain access to webinaries such as this live trading webinaries. You also gain access to our trading signals, some advanced trading tools, which is unique, like the advanced terminal, advanced chart, market cap, crypto scanner. You also get access to affiliate portal whereby you can be able to give your affiliate link to your friends, your families. When they sign up, you earn a commission. So let's dive down to our fundamental breakdown. So this is the weekly market outlook for 18th September to the 22nd September. And you can see over here on Monday we have upcoming events. This is gotten from FX Live. The land service PMI, the USNAHB housing market index, the New York session. Then on Tuesday we have Australian meeting minutes, Reserve Bank of Australia meeting minutes. Then Canada CPI, inflation rate for Canada. Very important news for Canada pairs. Be watching out for that. Then US building permit and housing starts, which has to do with the permits that the government has given to build developers to be able to build houses in the United States of America, and also the housing starts, those houses that have been completed in the United States of America. Then on Wednesday we have PBOC LPR. Okay, this is the Bank of China LPR, and this Bank of China LPR, there has been high sentiment. There has been high sentiment that is going to affect the Australian dollar, making it to be weak against the dollar and putting it into the bearish angle. Okay, but based on the market structure, because I have done macro analysis going down from the monthly to the weekly to the daily to the 4 hours on the Australian dollar against the United States dollar. We're on a bullish structure. Okay, we're on a bullish structure. I'll be pasting the info on my Telegram channel. Just click the link below, join the Telegram channel, and you can be able to view the whole information that when it comes to the structure I see on Australia AUD against the United States dollar. Okay, so what I see on Wednesday is the UK CPI, the Bank of China summary of deliberation, the FOMC policy decision. So that's what I see for Wednesday. The Bank of China LPR, or the UK CPI on Wednesday, which is the inflation rate for United States, UK, which is London on Wednesday. Very, very important news event. Very, very important news event. You cannot miss that. You should not miss that. We'll be trading live on Wednesday with you guys, and this news is coming out by 12 p.m. West African time. So we'll be starting our live trading session by 11:30 a.m. West African time. So don't miss out on that opportunity to make some dollars. Okay. So we have the bank decision and then the FOMC policy decision. Then on Thursday we have the New Zealand GDP products. Then we have the SMB policy decision, and then Bank of England policy decision as well, and US jobless claims. I think I'm more comfortable with trading the US jobless claims on Thursday because these policy decisions, they don't really have the high probability of moving the market to a certain direction during that particular period. Okay, they don't have the high probability of moving the market to a certain direction during that particular period. Then on Friday we have the Japan CPI and the Bank of Japan policy decision. So the CPI is coming in for Japan on Friday. Oh my God, I don't know how many of you can stay awake during Asian session, which is going to be about 10 p.m. West African time to about 2 a.m. West African time. So if you can do that, That's a sacrifice. Okay, you're making the money is a sacrifice, because once you place those trades, you make the profit. You're free to do whatever you want to do. You live your life the rest of the days. If it's books you like to read, you read. If it's books you like to write, you write. If it is exercise you like to do, you do that. If it is whatever you really want to do with your time, personal development and so on and so forth, just get that done. Okay. So Bank of Japan policy decision. So we have Bank of Japan position. That's not a high impact news that will push the market to a certain direction, but it could have a high sentiment based on the overall direction the market is going to move within a month or within 2 months. Okay. Then UK retail sales, Canada retail sales. This is a very important news event. Retail sales for London session, Canada new retail sales for New York session, and flash PMI for AU, Australian dollar, Japan, UK, Euro, and US to end the week on Friday. Very interesting. So breaking down more on the fundamental on Tuesday, you can see we have the Canadian headline CPI year over year is expected to tick higher to 3.8%. That's the expectation versus 3.3% proud. That's the last data. So if it ticks higher by 3.8%, which is going to be an increase of 0.5%, which is making hiking interest rate by 0.5%. If that happens, it's going to cause the Canadian dollar to lose value. So that means that USD card will be going to the upside. Card JPY will be going to the downside. If interest rate is increased for the Canadian dollar, just know that the Canadian dollar is going to lose value. Okay. Why the month reading is seen at 0.2% versus 0.6% per hour. Okay. The month over month. Why the year over year is different? The year over year of interest rate is different from the month over month. Then the Bank of China continues to complain about the slow disinflation in the underlying measures. Disinflation is different from inflation. Okay, they are complaining about the slow disinflation in the underlying measures, which beat expectation in the previous month, although they were lower than the prior reading. Okay, they were lower. There is currently no consensus for the core measure, but higher figures would put the central bank in a tough position given the recent rise in wage growth. Okay, so based on what I'm seeing currently for the Bank of China, a lot of countries in the world are complaining about inflation. China is complaining about disinflation. They have a total different economic matrix. The way they run the economy, the matrix is different and it's quite beautiful. Okay, but the challenges they have is quite different from what every other country who has inflation has. Okay, their own challenge right now is that if they cannot be able to make inflation increase, interest rates in their currency will not increase. And if interest rates in their currency will not increase, a lot of citizens in China will be selling their currency and buying other currencies like euro, where they have higher interest rates, so they can get more profits. Okay, so the government has been able to formulate some core measures so that they can be able to control those type of activities and trading arbitrage in their economy. Okay, so that's what I really see for the Bank of China. They're in a tough position, and if they are affected, remember every single issue happening in China affects the Australian dollar. It affects Australia. Okay, so be mindful of that. Then on Wednesday, we have the UK headline CPI year over year is expected to increase to 7.1% versus 6.8%. That's about I think that's 5%. It's 0.5% hike in inflation, interest rate. And if that happens, okay, if that happens, that's going to make the GDP or the Great Britain pound to lose value. Okay, so currencies like GBP USD will be selling massively. Currency like euro GBP will be buying massively. But this is not financial advice, okay? Me saying that it will buy, there could be some underlying measures that would limit the buying pressure on euro USD, sorry, euro GBP. And there could be some underlying measures that would limit the selling pressure on GBP USD. So do your research. There could be some announcements. There could be some information or central bank and speaker that would say one or two things that would limit the potential sales on GBP USD or potential buys on Euro GBP. Okay, so watch out for that. Why the month over month reading is seen at 0.7% versus minus 0.4% per hour? Such a big increase is due to higher energy prices, which the central bank more focused on the core measures at the moment. The UK core CPI year over year is expected at 6.8% versus 6.9% per hour. Interesting. While the month over month figure is seen at an uncomfortable 0.7% versus 0.3% per hour. Interesting. This report is unlikely to change the market pricing for the Bank of England central bank is expected to hike by 25 base points, but it will influence the expectation for the next meeting. Okay, very interesting, very interesting. Okay, so this is the UK core CPI year over year, which has to do with interest in inflation. So when inflation is increased, what the bank do to control inflation is what to increase interest rates. And when they increase interest rates, they limit the supply of money into the economy. And when they limit the supply of money into the economy, they limit the spending, okay, for retailers and borrowing for businessmen. So in such cases, what really happens is that they expect inflation to reduce. Okay, so that's what the banks have been doing for about 10 to 15 years now. 10 to 15 years, which also caused the boom and bust back in 2008, mortgage-backed securities. Okay, so I just hope that the matrix operating the world can be fixed with the current matrix that is about to be implemented, which has to do with CBDCs. Okay, so watch out for that. A lot is going to change. A lot is going to change. You need to know that the world is going to a whole different direction, whereby you don't have to see physical cash ever again, and you need to position yourself for this change. I'm going to be giving you guys one update now. I said I'm going to keep this to myself, but for staying to this end or watching to this end, this is going to be like a golden reward for you watching to this point. The world is changing. CBDCs are coming into existence. There are companies currently in the United States of America supporting the Federal Reserve Bank. Everybody knows that the Federal Reserve Bank is a private corporation in the United States of America. If you don't know that, know it now. And they have the license to print the United States dollar and loan this money to the banks. This corporation now is owned by private individuals who are elites. Okay, nobody knows them. They don't want you to even know them. No person is allowed to enter into the Federal Reserve Bank. Wait. I think the picture, yeah. Looking in front of my screen right now, this is the picture of the Federal Reserve Bank of the United States of America. Nobody is allowed to go into that place. That's where they print the money circulating within the United States of America. With the introduction of BRICS, which has to do with Brazil, Russia, India, China, and South Africa, okay, everybody is going away from the United States dollar. And if that happens, dollar is going to lose that overall manipulative power they have of printing more dollar to keep their overall power in the market. Russia is now trading with China with their currency. China is now trading with India in their currency. Everybody is letting go of what? The dollar. Saudi Arabia has just mentioned that they want to join BRICS. What do you think is happening? If this happens, dollar is going to lose that overall control it has. And what really happened and why this is currently happening within our time is that Russia had issues with Ukraine, and there has been a lot of sanctions to billionaires and businesses in the United States of America who has their dollars, their net worth stored in the United States dollar. They say that about $50 billion of net worth was seized in the custody of the United States of America by Russian businessmen. So if you're a Russian and you have your money in dollar, the Reserve Bank of Dollar or Federal Reserve Bank has the license to what freeze your account because it is in dollar. Every other country is having their eyes opened. Okay, if you have anything that is wrong or you do anything that is wrong against these guys, they have controls and supreme power to what seize your assets and also make you feel so low, not to be able to what overcome them. So this is what's really going on in the world, and that's why dollar is gradually shifting towards the CBDC formulation. Some banks, like the Bank of China, has already implemented CBDC. The Central Bank of Nigeria has also implemented CBDC. Okay, that's the digital aspect of money, which means that your money is going to be on your phone. You're not going to be seeing any other physical cash. It's coming, and it's coming very, very fast. One thing I just have to tell you is that I'll be dropping a name of a company. You need to buy their stocks because currently in the United States of America, they are the company that the government had given the contract to help the Federal Reserve Bank to implement and what distribute the CBDC into the economy of the United States of America. Okay, so I'll be listing the name of this company. I'll be pasting the current price of this company. I'll be pasting the broker. You can also go and buy shares of this company. Okay, instead of wasting that extra dollars you have, spending it on something that is worthless, invest, bro. Invest, because yourself 10 years from now is going to praise you like a king for doing the right things. There's a lot of things that you can just cut off in your life, sacrifice for the reward you're going to get. Okay, so I'm just talking to you because I don't know the way you think, I don't know where you live, I don't know the way you as in the way you handle your money, but I'm talking to you from an angle that a lot of things in life can be sacrificed for a future goal you want to achieve. Okay, so I'll be dropping the name of the company, the stock price currently. The anticipated result is about 35,000% increase. Think about it, when this particular company is handling trillions of dollars in circulation for the Federal Reserve Bank. A heads up is that probably if you didn't watch this or probably you're lost, just Google the company partnering with the Federal Reserve Bank to implement Fed Now. Fed Now. Fed Now. FEDNOW. Fed Now. If you're able to discover that company, you're able to find the key to the Pandora box. So diving into what I have for the Fed is expected to hold rates steady at 5.25 to 5.50%. But the market focus will be on the summary of economic projection (SEP) and the dot plot to see if the central bank still sees the need for another rate hike or it has reached its terminal rate already. As a reminder, in the June dot plot, the Fed increased its terminal rate projection by 50 base points to 5.6% from the previous 5.1% in March. The market currently sees a 50-50 chance for another rate hike at the November meeting, given the strength in the economic data recently with rates cut being priced for Q3 2024. Okay, so based on what they just said now, they're saying that there is high chances of what another rate hike, and the rate hike is going to be about a 25 base points rate hike. Okay, but the last time there was a 50 base points rate hike, it was a terminal rate hike for the Federal Reserve Bank. Okay, so if this happens, they also expect the dollar will be weak whenever this rate hike is implemented. Okay, so the next is on Thursday. the SMB is expected to hold rate steady at 1.75%, given the weak economic data and both the headlines and core inflation measures being in the SMB's 0 to 2% target band. SMB, SMB. I think that's Switzerland. I think that's Switzerland. Yeah, Swiss National Bank. That's Swiss National Bank. That's Swiss National Bank. So they're expected to hold rates steady at 1.75%. Let me tell you guys, Swiss franc is a safe haven though. Swiss franc is a safe haven, but it has some atoms of risk in it. Swiss franc is a safe haven, but it has some atoms of risk in it. So when I say that Swiss franc is a safe haven, is that a lot of investors, a lot of businessmen, they sometimes move their money out from dollar to Swiss franc. Why? Is because I think 7 years ago, the president of Switzerland says that no more printing money. To this point, Switzerland has not printed any single copy of their currency. They have not printed any single copy of their currency. It's shocking, right? But that's the way they implemented their system. That's the way they implemented their matrix of their economy. So what you need to know is that since Swiss franc has stopped printing their currency, a lot of currencies like the dollar, the euro, the pounds, most times when they want to carry out huge money laundering transactions, let me just put it that way, okay, they put it sometimes to Swiss franc or Swiss banks, okay, because there is a high security when it comes to moving your money offshore to such bank accounts. And why that is very, very good and also bad is that there is a lot of law that states that whenever this asset is in the custody of the Swiss bank, you need to have like relatives, you need to have businesses in that country to be able to give you access to operate with those funds. So there's a lot of inner deeper policies when it comes to the Swiss National Bank taking the time to say no more printing of money. Instead, let us find other means. Let us find other ways to be able to give our currency value. Okay, they had to peg their currency to real estate. They pegged their currency to real estate. Just the same way, in 1978, the dollar was pegged to gold. Swiss National Bank has pegged their currency to real estate in Switzerland. So if you're holding some Switzerland currency, know it that you have a portion of land or real estate that is equivalent to that currency you're holding in their country, which is also a good structure or a good matrix, okay, for a particular country like Switzerland. That's why a lot of people like to move their money to Swiss banks, okay. So that's just what I think here. They are not increasing interest rates. They're leaving it steady. It has been at 1.75%. A lot of banks like the GBP, the euro, the Fed, they have targets to hit 2%. Swiss has been in 1.75% for a very, very long time. Okay, and their price range has been 0 to 2%, 0 to 2%. They don't go above 2%. They don't go below 0%. So that's it for you. And when that day comes, probably there will be little or no volatility on Swiss pairs. Okay. So the Bank of England is expected to hike by 25 base points, bringing the bank rate to 5.50%, with Bingrang being the usual dissenter. Recent communication seems to be leaning more towards keeping interest rates high long enough to let the tightening in the pipelines to come through. Nonetheless, the central bank should keep all their options on the table, given its inflation and wage growth rates. Okay. So, like I told you guys, Wednesday, it's 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 a gold mine. If you miss it, you miss it. Okay, but don't miss it. That's what I'm just advising you. Rate hikes expected Wednesday. Bank of England 25 base points. Euro USD is going to be shorting like they just drop a bomb on it. Okay, so you guys should be aware of that. You should be aware of that. The US jobless claims beat expectations once again the last week. That was last week as the labor market continues to soften, although it remains fairly tight. This week, the consensus seems in initial claims at 225k, 225,000 versus 220k per from last week. Okay, the initial jobless claims. Those people that say that I don't have job again, okay, in the United States of America, and continuing claims at 169,500 versus 168,800, okay, per. So what this means is that jobless claims means that, hey, I don't get job again for US, or I'm not employed again in US, which is quite bad for an economy. Okay, so when there is no employment for a particular individual, there is no cash flow, there's no paycheck. Okay, and when there's no paycheck, this individual cannot be able to operate seamlessly on the economical activities and personal needs. Okay, so what it means is that last week beat expectation. It was higher. Okay, the initial jobless claims beat expectation. It was higher, which was bad for the dollar. So this week now, we having also consensus that it's going to be higher than the last week own. Okay, because there was some layoffs. There was some layoffs ending last week. I think it was Amazon or so that had a few layoffs last week in US or so. So do your research though. Do your research. Then continuous jobless claims have to do with people that filed for jobless claims last week are filing for jobless claims this week, which means that they just lost their job and they had to go to the Bureau of Statistics to file in that they just lost their job and they are open for employment. So that's what that means. And when that happens, it makes the United States dollar to be weak. Okay. So on Friday to end the week, the Bank of Japan is expected to keep everything unchanged with rates at minus 0.10%, which is negative interest rate. Okay, and YCC to target 10-year JG, JGBs at 0% with a soft cap at minus plus 0.5% and a hard cap at 1.00%. The yield on the 10-year recently spiked to 0.7% following Bank of Japan Governor Yuda comment about a quiet exit from NIRP. If the data supports such a move, the Bank of Japan, of course, intervened by buying unlimited amounts of JGBs last week, as they already repeated many times that they will do so if the pace of the move is too fast. Moreover, the wage growth data continues to point to a slowdown, and this is something that the Bank of Japan watches very carefully. Okay, so based on all I just spoke about is that rates are unchanged. Bank of Japan, they're not increasing interest rates. Why they do that is because to keep their exchange rates on the market good for uh, foreign countries like US, Europe, West African countries to be able to come and do trades with them. But this has been affecting their country. And in such cases, the Bank of Japan, they have been buying 10-year bonds, 10-year bonds, okay? And these 10-year bonds, when it comes to the soft cap, most times they used to have an interest of 0.50% and a hard cap of maximum 1%, which is going to be very, very safe. So based on what really happened last week, the Bank of Japan bought excess amount of 10-year bonds named as 10-year GDBs, okay? And the price spiked up by 0.75%. So based on everything that has happened in the economy of Japan, the bank is also saying that because of there's a lot of demand for wage growth, more salaries to be paid. If this data continues to slow down because nobody is paying those wages or increasing those wages, the bank will also be buying more what assets of 10-year yields, okay, 10-year bonds, okay, issued by their exchange to be able to what still circulate the money within the economy, because buying bonds is more like lending money to the government. So if the bank is buying these bonds, they are lending money to the government so that the government can be able to operate, okay? And probably there is high chances that when the government operates with this money, they can be considering the wage growth data, okay? But if that happens, you can see the market have a turnaround. But for now, this is affecting the market and is making the Japanese yen lose a lot of strength. Okay, so the flash PMIs are usually big market movers as they are the most important leading indicator we have. Flash PMI, that is producer, no, producer, is that PMIs? I think something, let me check that out. Okay, PMI has to do with manufacturing price or price of manufacturing stuff, are usually big market movers as they are the most important leading indicators we have. The market should focus on the eurozone and the US PMIs, with the latter likely to have a bigger impact on global markets depending on the outcome. The US manufacturing PMI is expected to match the prior reading at 47.9, while the service PMI is seen lower at 50.3 versus 50.5 proud. Okay, so we'll be focusing more on the eurozone and the US manufacturing PMI. Okay, so thank you so much for staying to this point. I hope you got some insight. I hope you got some value. If you got some value, smash the like button. For watching to this end, I really appreciate you coming to this point to get some financial knowledge that's going to give you one step ahead towards the financial market. Please smash the like button, comment below your favorite part of the session, and don't hesitate to share this content to your friends and family. Do have a profitable and fantastic trading week.